Today we will learn the 3 golden rules that every accountant must remember. As you can see, we have 3 types of accounts. Each one follows a specific golden rule. Let's go through them one by one. So, for a personal account, remember the golden rule. Debit the receiver, credit the giver. Let's see how this works. If A gives money to B, A is the giver and B is the receiver. And that brings us to our third rule, nominal account, debit all expenses and losses, credit income gains. Let's look at some examples. For rent expense, we would debit it, and for sales income, we would credit it. Alright, all together now, the golden rules of accounting are:
Nominal account, debit the receiver, credit gold account, debit all expenses.
Today we will completely remove the confusion about debit and credit. So, you see, debit doesn't mean bad and credit doesn't mean good. These are just accounting terms, not value judgments. So, as you can see, the T account has 2 sides. The left is debit or DR and the right is credit or CR. Let's work through a simple example together. Business owner invests 100,000 of cash into the business. So our cash is increasing, we debit cash to show the increase, and we credit capital to show the increase in owner's equity. Business purchases office furniture for cash. Now, which account should be debited and which should be credited?
Debit furniture, credit cash.
Business purchases office furniture for cash. Now, which account should be debited and which should be credited?
Debit furniture, credit cash.
Which financial statement reports a company's assets, liabilities, and stockholders' equity at a specific point in time? The correct answer is C, the balance sheet. The balance sheet reports what a company owns, what it owes, and the owner's residual interest on a specific date. Let's review MCQ number 1. Which accounting equation is correct? The correct answer is A. The accounting equation is the foundation of financial accounting. Every asset's equal to liabilities plus equity.
Next lesson, journal entries, recording business transactions step by step.
Question 3. Which financial statement reports revenues, expenses, gains, and losses? The correct answer is B. The income statement shows financial performance, including revenues, expenses, gains, and losses to determine net income. Which financial statement reports cash inflows and cash outflows during an accounting period? The correct answer is C, statement of cash flows. It is divided into operating activities, investing activity business during an accounting periods. Which financial statement reports cash inflows and cash outflows during an accounting period? The correct answer is C, the statement of cash flows. It shows cash from operating, investing, and financing activities. The statement of stockholders' equity explains how equity changes during the accounting period. It includes common stock, additional paid-in capital, minus data income, minus dividends, other equity changes, equals ending equity. The primary purpose of the statement of retained earnings. Take a moment. The correct answer is B, to explain changes beginning and ending retained earnings by adding net income and subtracting dividends. The statement of retained earnings reconciles the beginning retained earnings balance with the ending retained earnings balance by adding net income and subtracting dividends. Beginning retained earnings plus net income minus dividends equals ending retained earnings. The matching principle requires expenses to be recognized in the same accounting period as the revenues they help generate. This provides a more accurate measure of profit. When employees have earned their salaries but payment has not yet been made, the company must recognize the expense and record a liability. A company has completed consulting services for a client but has not yet billed or received payment. Which adjusting entry is required? The correct answer is A, but cash has not yet been received or billed. Recognize the revenue and record a receivable. Pause for a moment to consider the correct adjusting entry. The correct answer is A. We debit unearned revenue and credit service revenue. When cash is received before services are performed, a liability is recorded. As services are performed, reduce the liability entry, and the flow. Pause for a moment to think about the correct entry. The correct answer is A. When cash is received before services are performed, a liability is recorded. As CPA 12 performed, reduce the liability and recognize revenue. Let's note the key steps. A company received cash in advance from a customer. By the end of accounting period, part of the service has been performed. Which adjusting entry is required? The correct answer is A. Debit unearned revenue, credit service revenue. Question 15. A company purchased supplies earlier in the year. At year end, some have been used. Which adjusting entry is required? When supplies are purchased, they are an asset. As they are used, an adjusting entry recognizes the expense. Let's look at MCQ 15 on adjusting entries for supplies. Pause here to think. The correct answer is A. The explanation. Purchases are an asset, then an adjusting entry is expense. Journal entry is debit supplies, credit supplies. Next is MCQ 16. At year end, interest is earned but not yet received. Which adjusting entry is required? The correct answer is A. When interest revenue has been earned but cash has not yet been received, the company recognizes the revenue and records a receivable.